G'day there. Welcome to the closing bell on the 17th of May, on the Friday for me, about midday. And well, markets looking a bit better, aren't they? With the inflation scare of the last few months possibly being dealt with the inflation numbers coming in a bit under expectations in the US. Let's hope that can continue. That really is what we need to see to get things really firing. This expectations of rates falling. We're all waiting with bated breath for that to take shape, aren't we? And look, I've got a presentation out there at the moment where I'm guessing most of you have realized that I'm looking at oil as potentially the next cab off the rank to take off to the upside. Really, it's a presentation, outlining my process, how I go about things, and let's face it, it's to hopefully get you guys on board as a client of mine in one of my services, Retirement Trader. And I really just want to give you a sense of how I go about things in that service and who it's for. And hopefully we'll check that presentation out to get a bit more of a sense of how I go about things. And really, what I'm doing in Retirement Trader, it's not for retirees. It's for people who are serious about their investing and, really are trying to build wealth for retirement. So it's not just for having a punt. It's not for people who just want to trade every day and doing it for a bit of fun. It's for people who are searching for advice from someone they know, first of all, what they're doing, and that they take it very seriously, sending out investing ideas to people. And that's what I do. I don't overtrade. If I don't know what's going on, I'll tell you quite happily that I'm sitting on my hands until I get a really good investment idea. And if that takes a month, it takes a month. People who are members will know that I will just sit on my hands if necessary, but then I trade aggressively when the moons align and I see an opportunity. And that's what I've done the last year, looking into uranium. I looked at first, and then gold. We got on that. If you'd watch Closing Bell, you should have known that I was talking about those things at the time. I've shown you different trades along the way as well. If you've been paying attention, you should get a sense of how I go about things. Really, the fact that I'm looking at oil, that may or may not be the next one to fly. I've got, I'll show you in a minute, all of that set up so you can get a better sense of what I'm looking at. But the idea is that I've got a process for investing that uses a trading methodology to get into investments for longer term investments. So it's a blend of fundamentals and technicals. I know I show you the charts on here, but I'm making decisions of really a blend between that fundamental and technical setup. For example, this chart you can see here, this is one of our trades. It's actually, I'm happy to tell you a couple of the names of the open positions we have because we've been in them for a while. This one is actually a uranium ETF, URNM. So it's an exposure to the largest uranium stocks in the world. And, I sent out a trading tip to buy that at $6 here, right? Just a couple of months before the uranium sector took off. And, that was based on my technical sort of view that I keep showing you of looking at these waves and looking at the buy zone and sell zones in those waves and the midpoints of the waves, the point of control. It's all the sort of things that I'm looking at to find these opportunities, where I also look at the buy and sell pivots that you should have been getting a sense of when I show you those things, where you have prices heading down. You can see on the monthly basis where we've got new lows being created and a monthly close below that low. And then the next month, we have what is the buy pivot there. So that's just the hint that momentum is turning up, and that's where I'm looking then for buying opportunities around that level. And you can see there, caught it just before things took off. We take part profit, sell a third of the position. You know, within a couple of months, we've sold a third of the position. And after that point, we've got like a stop loss down here, which is a break-even stop loss. So whatever happens, if prices collapsed, we'd be able to get out of the position for no loss. And also note that the stop loss is a long way from where those current prices are. So once things have taken off and we've taken our part profit, you know, our stop loss is miles away, miles away. The break-even stop loss, the price really has to collapse to get us out. So we're forcing the market to really move a long way to shake us out, which means we've got a much higher probability of staying in. And now that we've taken that part profit, you know, sitting pretty, knowing that we're going to break even or make money. And within a year, you know, bought it at $6, it's up at $10, over $10. And that story isn't just a single story. This is something that I'm doing over and over again. This one being, this is actually Deep Yellow, another uranium stock. And in the interest of, you know, full disclosure, we had one trade in this and we got stopped out by 1 cent. So we bought into this one. The stop loss was down here. And can you believe it? We got stopped out by 1 cent, but then got back in again. And this is sort of the trading process of you know, using the trading methodology to keep risk low, getting out if necessary, and then getting back in on the next buy signal. So you can see there, green diamond comes in. We bought 78 cents and blast off. And again, similar situation of taking part profit on the way, creating what I call the free call option. So with a free call option, I'm saying that once we've sold a third of the position and we've got a break-even stop loss, which is down here somewhere, prices could collapse and we would basically lose not 1 cent of our initial capital that we invested. So that means the outcome is either breaking even or making money, which is the same payoff as a call option, a free call option. Don't need to get into the nitty gritty, but hopefully that makes a bit of sense for you. And, you know, this idea of having a method that understands how momentum changes, looks for these opportunities. I mean, I don't know, you know, I've shown you for free all of these ideas in Closing Bell, but this is it in action with people who are members of my service. And here we have a gold stock, which is West African Resources, and we bought this one at 93 cents. So again, I'm looking at these waves to the upside. I'm looking at corrections of these waves and waiting for things like false breakouts, right, to the bottom where stop losses go off. So things are selling off. Everyone's despairing, thinking it's never going to go up again. Months and months of selling. And so there's lots of stop losses below this major low from 2021. Once those stop losses go off, if there's no follow through, things turn back up. Here we get the buy pivot, and I've got other calculations that I make, but basically we entered half position, 93 cents. And then once things started taking off with gold, we bought more at $1. And here we are, a matter of months later, up at $1.47. All based on, you know, both the fundamental, technical, wanting to get into gold, looking at the sector, saying, yes, this is the sector I want to get into, but then zeroing in on particular stocks that have those compelling setups of either, really strong long-term uptrend that it's been in, good value creation, and, West African Resources, the big hits, high grade that they're getting, and, producing great amount of gold at a good cost AISC. So really printing cash as the gold price goes up. So, there's a lot more that goes into it than just looking at the charts. I've just been sort of showing you over time the charts, give you a sense of how you can find these sort of opportunities. So, that's what we've been doing, and, looking at in this retirement trader service, looking at more conservative large cap things, but still using this trader methodology. And this is what I'm doing. Like this stock here, and I'll let you know the name of it. This is ResMed, so, multi-billion-dollar company, and had been watching it for years, and we ended up getting on this thing after the big sell-off on this Ozempic scare, thinking everyone's going to lose weight and not need sleep apnea machines. We've got on, you can see again the green diamond, the monthly buy pivot, things turning up. We bought here, $25. Within a matter of months, here it is up at $33, taking off, the earnings starting to come through. Looking at, again, this idea of these companies creating value over the long term, big, strong uptrend. I'm looking at the retracements. Here is what we call an ABC formation, and waiting for prices to turn back up to rejoin that long-term uptrend, and finding the spots where momentum is turning back up to join that trend. So, there's another one where we've just gotten in, and months later, things are flying off to the upside. And, following on again, this one here, which we've got in, and that one is actually Perseus, a gold stock. Again, note the nice strong uptrend, and we got on this one at $1.92. So just when gold broke out. So that's the idea of looking at the sectors, looking at the buy signals in the sector as a whole, then looking for the zeroing in on the company that's moving, that's looking good, nice strong uptrend, bouncing off support where I want to see support happening, and looking at the waves and the way that they retrace, and joining things when momentum turns up. So we're pretty much never out of the money on that one. $1.92, it's up at $2.38, and looking like it could break out to the upside. And, showing you everything, we got into this one, that's a Regis, and, it's flat at the moment. So got in at $2.03, it's a 202. So this one wasn't as loved by the market. You can see there, it's not in a big, strong uptrend. I'm really buying this one, looking for the breakout above 250, which needs to happen before it'll take off. And, they've had some problems with hedge books and that sort of thing that have been working against them. So the market hasn't liked them much, but I still believe in this one that it can ultimately take off. So you can follow that one along. And here's the new one that we've entered only recently. And you can hopefully see there, similar idea of big long-term downtrend here, and the start of an uptrend taking shape, looking at these waves, looking at the retracements into the waves, looking for the momentum to turn back up. And if you've got the fundamental story as well, I'm expecting, a resumption of that uptrend basically. And we jumped on that one on a good earnings announcement. And so, within a week or two, we're up 4%. So we've only just joined that one. We've only just entered the position, but again, straight in the money very quickly using a trading methodology. So that's what I do. I won't crap on like this often in these closing bells, but it's only a few times a year that I get to rattle the tin and get people to join what I'm doing. So if you are someone who does take your investing seriously, you're looking for someone who does actually know what they're doing and who takes their job seriously and only sends out ideas when they really believe in them and is happy to let you know when they're not knowing what's going on and pretty much say it as it is. No BS at all. That's what I do. So I'd love you to check out my presentation if that floats your boat, and would love it if you were to join Retirement Trader. All right, well, enough of that, and I'll just quickly look at the oil price for you so you can understand what I'm really looking at. So this is the oil price over the last few decades. And look, if you're not into oil, I totally understand. There's people who are really against oil and gas continuing from an environmental perspective. I totally get that, and I'm not banging a drum one way or the other. I'm just talking about the economics of something, and whether we will just need it for a bit longer before we shift to a new energy system. And I'm just telling you about markets that are in and out of balance and what they can do. So I'm not really making a statement one way or the other. And I do trade lots of other different types of investments and green investments. Happy to, go down that path as well. So just looking at this, you'll see in the presentation what I'm really talking about is these long-term trends that have been going on in oil for a very long time, and really just noting for me the long-term shift to up in this the way that I look at things, this 10-month exponential versus the 20-month simple. It's a pretty good record over decades of huge, strong uptrends happening after the long-term trend turns up. That's why I'm just very aware of the potential for this to turn into an uptrend. And the way I'm looking at it, though, is I do need prices to break out above this sort of area. So it does actually need to get above that sort of 92 to, let's say, $95 region. That is when it's going to be game on. And that can happen quickly, right? It's only the last few weeks it's been selling off. If it just takes off through there, oil has a target up towards 110 to 130. And it could happen quickly. Similar to what we saw here, the long-term trend turned up. We had an initial sort of breakout, you can see, then a few months of stuffing around, and then it broke out above that level, and we saw a huge rally take off into that area. So that's how I'm looking at things, and based on the waves and the structures I look at, we've got that massive wave over the last what happened in 2000, 2007. I see all of the price action since then sort of oscillating around that. The midpoint of that coming in around $80, very important level, the point of control, I'd call it. And all of the price action since really oscillating between what is the buy zone, which is a 75 to 87% retracement of this wave, and also the sell zone, which is that 12.5 to 25% area of that wave. And just notice that oscillation between that buy zone back to the point of control, sell zone back to the point of control, buy zone back to the point of control. Point of control ended up being massive resistance there, which is often the case. Back in the buy zone again, back to the point of control, from the sell zone again, and then back to the point of control. So this has been the way oil has moved for decades. It's been very clear. This point of control really important. And you can see there how oil had a lot of resistance at the point of control on the way down, it could be a similar thing here. And we are seeing, a lot of support coming in at the point of control over the last year. So just saying, similar to what we saw here of, going up, retesting that point of control and failing, it's a similar thing here of going up into the sell zone, retesting the point of control, and then potentially taking off again. So it's sort of a reverse, a mirror image, I guess, of what we saw from 2016 to 2020. So that's why it is sort of an interesting situation. And, we do need to see the buying come in again, back above that 91 to 93. That's when it's going to get exciting, and it can all happen pretty quickly. That's why I've got the presentation out there, trying to get people on board before it all starts to happen. But there's no view right now that it is going to happen. Right? That's why I have these lines in the sand before I start acting, because where it is right now, it's a little bit iffy. It's caught in the middle of the range of the past year. So if things fail, let's say economies fall over with high rates, there is still a chance we could see one more, visit of that buy zone. But I think fundamentally, oil prices will ultimately take off again. Maybe it's not right now, but whatever the case, we've got the strategy to be able to handle and to understand what's going on and take advantage of the price action. So that's really the major point to get across, is when I'm trading, if I'm looking at these things, let's say it takes off, if I'm buying, I've got very clear lines in the sand where I'm saying, well, no, you've got to get out if it can't carry on. And then you've got clear targets on the way up where you're taking money off the table, so that you're creating those free call options. It's all about managing your risk effectively over time. So that really is what I'm going on about at the moment. But there's lots of other interesting things going on out there. I think, copper taking off the way it is, really interested in what's going to happen in these future-facing metals as well, with China trying to push it down to scare off Western competition, and things like rare earths, the nickel, graphite. There's a lot of stuff out there that I think ultimately is going to turn higher. So there is a lot of stuff to be interested in over this next period, and markets are starting to trade higher. So that's enough. I'll go back to the regular way of going about things in future, but I'd love it if you could check out my presentation this week, because that will only be around for a few days. All right, cheers, and I'll come back with more next week.